Hey guys, just wanted to run through an example of a trade that happened on the 30th of October. But before I do that, I just wanted to quickly do an overview of the strategy, which is ICC, which is been made popular by Trades by Sai. ICC stands for, it's very similar to ICT, but it's not the same. ICC stands for indication, correction, and continuation. And I'll just give you a quick example just drawn out here before we go to the example on the 30th where you could have capitalized on an opportunity. So let's start with the first phase. Essentially, price needs to be in an uptrend. If you don't know what that means, I would suggest looking at Sai's videos or potentially have a look at mine just to understand what an uptrend is, what a downtrend is, and what consolidation means. So we've got a low in the market, a high. It makes then a higher low and a higher high. So that then indicates that we're in an uptrend. Price then makes a higher low before making another higher high. Now, where ICC works is essentially you need a point of interest, which comes from different swing points depending on whether you're in an uptrend or a downtrend. So in this instance, we draw a point of interest at the high if we're in an uptrend. So we can see price comes back below this level of this high before then breaking out. Now, when it breaks out, this is the first phase of ICC, which is indication. Then price comes back down, right, which is the second phase, which is the correction, before then making a new higher high, which is the continuation phase, and at which point we're entering our trade here. And the reason for that is because we know that we're in an uptrend, so we've already confirmed that on the basis that we're making higher highs and higher lows. We know that above this level, price has the potential to be bullish, and that's where at one point in time buyers stepped in with a lot of strength. So we know that if price gets above this level again without making a new low, it's made a higher low because it's higher than this one, and this it's higher than this one as well. We know that price has the potential, or it's more probabilistic that price is going to continue in an uptrend. So with that, then we then look to make an entry at this point of interest and capitalize or take profits at the next swing high, or you can then look to, hold the trade for longer depending on your risk appetite. So we always draw this on the higher time frames. I personally like trading the 1 hour time frame. That's personally my preference. You can trade higher time frames if you'd like. I have this. I think for me, the sweet spot is the 1 hour time frame. And then when I'm looking to take entries, so when I'm at the second or third phase, I'm scaling down to the 15 or 5 minute time frame to then look for entry. So putting that all together, we are going to have a look at the trade opportunity again that was on the 30th of October. So putting all that together, we can see that price is making higher highs and higher lows, indicating that we're in an uptrend. So if we then look at the day, I trade the London session, but I trade on the New York time frame, which is UTC -4, and the London Open with the time zone of New York is 3 a.m. So I'm looking for trades from 3 a.m. onwards, essentially, and that's essentially it. So we can see here, right? We've got the first phase. We've got the first phase here because price breaks above this high, creating an indication. So first phase is the indication. Second phase is the correction, right? So price is breaking below this level now. Okay, we've broken these lows, which suggests that we potentially have the potential to be bearish. But at this time, I'm not even looking at the charts. So, you know, you could have potentially maybe looked at capitalizing here, but that's not my forte. I don't trade the Asian session. So if we're looking at 3 a.m., which is around this time here, if we're then looking for the same things, guys. We're looking for the ICC. So this is indication, first phase, correction, second phase, and continuation, right? We're looking for the exact same thing or very similar characteristics of an uptrend or ICC when we zoom in to the 15-minute time frame or 5-minute time frame. So with that in mind, if we zoom into the 15-minute time frame, we can then see that this on the higher time frame is the indication phase, right? Indication phase, which is the first phase. Price then corrects, which is the second phase. We're only looking to be interested in price or taking any trades at 3 a.m., which is this point in time here. So this time onwards is only when I'm going to be looking to take trades. Okay, so if we zoom in just a little bit, we know that our overall target is going to be this swing high because we've identified that, right? So that's our target. I'll just quickly write that. So this is our target. Okay. Indication, correction. Now we're looking for the continuation phase, which is the third phase. Okay. So let's zoom in. All right. So 3 a.m. is here. Very well could have got an entry here. Or you could have got an entry here. Either which way, it actually doesn't matter. So say for instance, let's say we did get an entry right on 3 a.m. What you'd be doing is working out the risk parameters for this trade. Ideally, you want a 2-to-1 or a 3-to-1 or more. Ideally, the sweet spot is a 3-to-1. I think a 2-to-1's fine sometimes, but try to really aim for 3-to-1s. Those are the sweet spots, because essentially if you have say 2 losses in a row and then you win your next trade, you still make profit. You're still $100 up. Say if you're risking $100 each time, so you lose 100, lose 100, then you win your third trade, and it's a 3-to-1 risk to reward, you're risking $100 to make 300, you're up 100 overall. Okay, so that's the importance of having the sweet spot of a 3-to-1 risk to reward. So with that in mind, say what we were saying, I think we were saying, say we did get in at 3 a.m., which is the London Open, which is right here. You'd be putting your stop loss below either the previous swing low or the next previous swing low, depending on your risk appetite. Okay. So in this instance, how I look to take trades in particular is, or how I look to take profit is, I've got 2 targets set, and I'll show you exactly how I calculate that. So in this instance, this is, let's work out how many ticks it is. It's 537 ticks. So I've got my ultimate target here, but then I've also got a partial at the halfway point between the overall target and the entry. So the next target, or the first target, would be somewhere in the middle here. I'm not going to get the exact amount. I'm just going to eyeball it. So if we then look at this, right, we can see that within the first 15 minutes, price hits that first take profit with ease. And then price comes back below this level. But we notice here that price actually doesn't actually break this swing low. This should have been here. Pardon me. So price doesn't break this swing low. Here, it doesn't break this swing low. So at which point what I'd probably be doing, again, as price has swung back up again, remember we entered here, as price has swung back up again, I'd be moving my stops to this swing low. Okay. It's probably a better representation. There we go. And then letting the rest ride. So we've already hit our first take profit. Gets a little bit scary here because price, almost does come back and take us out. But it doesn't actually happen in this instance. Now the overall risk to reward is a 2.4, which is still good. It's just a little bit below a 3-to-1, which is the sweet spot. So you can see that worked out quite well. And, I guess the other thing as well, I think if you're, starting out, which I'm still quite new to this strategy as well, and you don't feel comfortable about something, you can move your stop loss. I wouldn't recommend it, but because it will be detrimental to the overall strategy itself. Actually, ignore that. Don't do that. Just set your risk and try and walk away. At the moment, that's the biggest thing that I have trouble with at the moment, is actually just walking away and letting the trade play out. So I'm really working hard and I think that just comes with trust of the strategy. I'm really trying hard to just place the trade and walk away, but I'm at the moment still quite consistently looking at my phone because I've got access to TradingView on my phone and I can see trades playing out. And I'm constantly thinking about it. So I think the ultimate state of mind would be when you're actually quite relaxed. And I think that just comes with time and trust in yourself and trust in the strategy. At the end of the day, you have to really trust yourself, and that just takes time. And it's a lot of patience to really trust a strategy as well. I don't know the amount of strategies that I've been through and felt distrust in a strategy, and the amount of strategies that I've gone through is countless. I can't even think of how many I've probably gone through, but that's beside the point. So anyway, you can see this opportunity was quite good. So we had two opportunities this week trading the ICC methodology or strategy, whatever you want to call it, the ICC concepts. So it was this day, the Thursday, the 30th of October, and I made a video about 3 days ago. There was an opportunity on the 27th of October, and feel free to watch that one too. It's pretty simple, guys. I'm if you've got any questions in relation to any of this, or you've potentially may need some help, I'm still new to this strategy myself. So if you've got any some cool pointers that you might want to let me know about, I'd be more than happy to listen to that. I think it's a really good thing that Trades by Sai is doing, or Sai is doing, giving all this information for free and helping people out. And his videos are absolutely fantastic. So I highly recommend watching them. And I think it's also good to watch other people as well, just see their take on how they take their trades. And that's I'm doing these videos primarily, you would have heard me say in my previous videos, because I'm reinforcing what I already know, and I'm also hopefully helping those who might want to get into trading as well and don't really know where to start. So I really hope that these help people in all cases. Anyway, guys, if you've got any questions or if you've got any pointers, feel free to make some comments. If you like the video, please like the video. And if you like it even more and you want to see more content, I'd very much appreciate hitting the subscribe button. I'll leave it there. Hope you have a great weekend, and I'll see you in the next one.